This might be one of the best long opportunities I've seen in a very, very long time. And in today's video, we're going to go over the reasons why I think that's the case. I hope you guys still have portfolios that are intact because you're going to want to buy some dips. This is not financial advice, but we're going to go over the details. All right, so I hope you guys enjoyed today's video. We're going to take a look at the SP 500, the NASDAQ, all that good stuff. Let's get started. So first and foremost, this is the weekly time frame of the S&P 500 futures. What we're going to be looking at is what occurs to the overall market when things are this overextended to the downside according to the Bollinger Band. So the Bollinger Band is a very, very good indicator in terms of overextension. So for example, right now, you can see that the ES, the weekly time frame, is trading outside of the lower level of the Bollinger Band. So what the Bollinger Band denotes is a need for a reversion back within the Bollinger Band. Does that make sense? So because we are this far overextended to the downside, it increases the likelihood of a bounce to the upside. Now, the same occurs when you are trading outside of the upper level of the Bollinger Band. The market tends to want to revert back inside, which tends to get a pullback. Does that make sense? So we are currently trading very, very far outside of the lower, which increases the likelihood of a bounce to the upside. This is just on the weekly time frame. What we could also do is look at what occurred in the past when we were trading outside of the weekly time frame before. So this occurred before in October in 2023. We were trading outside of the weekly Bollinger Bands. We opened outside and we bounced very, very aggressively, as you can see here. Bounced very aggressively. This also occurred back twice in 2022. Back in May, we opened and it bounced very aggressively that same week. And we opened outside of the lower bands over here in June and July. And we bounced very aggressively again. And the latest occurrence prior to that was during COVID. So what we ended up seeing was we opened on the weekly time frame on March 23rd, which was the bottom of the COVID crash. This ended up obviously ripping to the upside. So what this tends to show us, purely based on just looking at it from the weekly time frame, things do not get really that much better in terms of wanting to lean long in the short term, especially buying dips for, first of all, day trading wise. This week, I'm going to be leaning long in terms of my day trades. That's number one. Number two, any calls that you want to buy for longer term, for maybe months out, this is the time where you want to start leaning long. This is not the time where you really want to start leaning short, because yes, by all means, we can continue falling lower. This week, great. Next week, we could also even end up even more red. We could end up opening even more red next week. That's spectacular. But historically speaking, that the weakness does not sustain itself. So within 1 to 2 weeks from today, from this video, the market should bottom itself out and start rallying, in my opinion. Regardless, however, when we get this much weakness, to try to short into the weakness is very, it doesn't make any sense, because when you're also looking at it from the highs, from the most recent highs, we've dropped 20% at this point in a matter of a couple of weeks. So this is definitely a time where market would want to get a bit of a bounce. We hit the major 4,800 level on the SPX. We're about to touch it. The Russell today in the pre-market was about to limit down. So just in general, guys, this is not just purely based off of the weekly time frame. You don't even need to look at anything else. The daily time frame is a whole different story. It's just looking at it on the S&P 500 on the daily time frame here. We are about to open up very, very low. This is screaming to buy the dip. This is not the time where you want to start leaning short. As people become more and more aggressive to a bias, as people become more and more like, once the team mentality starts to occur, like, oh wow, I'm bullish, everyone that's bearish is stupid. Oh, I'm bearish, everyone that's bullish is stupid. Once that herd team mentality occurs and people start to become aggressive to each other, that tends to be a reversion signal in the market. Especially something like this, where we're dropping another 4 or 5% over the weekend. You have to realize this is not the time to start being bearish. This is not the time to start going short. By all means, we can drop. We can continue dropping this week. But historically speaking, from what we've seen the last few times this occurred, during COVID, the last few times this occurred, we could even go back to 2018. Same thing occurred on the weekly time frame. We could go back to 2016. Same thing occurred. 2015, it didn't occur as cleanly, but we were not that overextended, and the trading, just the dynamic for the trading was also very different. But this is still, you have to just realize, first of all, I mean, look at how look at how overextended it was back in 2015 to the downside. This is sort of similar to what we see today. We got a nice rip to the upside, but regardless, weeks and months down the line, the market bounced pretty aggressively. So, and then we could also take a look at 2011, same concept. We bounced back into the Bollinger Bands and ripped, and just much more cleaner situations. 08, we opened outside and it ripped very, very aggressively that same week, and then weeks to follow. And then again in 09, we got another flush down, made new lows, and it ripped. So the odds are in the favor of being long and buying the dips for longer term. If you're over here convinced that the market is going to continue dropping after a 20% drop, it is not the best opportunity to start going short. And I truly hope this makes a lot of sense. We don't even need to look at really anything else. This is probably just, we could take a look at the indicator here. This shows extreme oversold levels as well. And the only other time that we had this much of an oversold in terms of the advanced decline indicator on a weekly was back during COVID, back during October 2022, and didn't even get that low. It's really in even 2011. So this is the lowest it's been almost in history, aside from COVID. And we know what ended up happening afterwards. So it bounced over here. We bounced from here. So things are pointing to a bit of a bounce in multiple different assets, multiple different facets. And not to mention the VIX is also going to be trading outside of the upper level of the Bollinger Band when it opens. And the VIX shows an inverse relationship to the market. When the VIX is rising like this and it's trading outside of the upper bands, if the VIX is rising, the market is going to drop. But if the VIX should be dropping because it's opening outside of the upper bands, the market is going to end up ripping. So keep that in mind. Now is not the time to start being bearish. Lean long, make money, enjoy your life, and trade responsibly. This is definitely going to be a really, really good long opportunity for longer term. And in terms of a bounce upwards, that could end up occurring sometime within the next 2 weeks. The market should bottom itself out and get a nice bounce upward within the next month and a half. I'm expecting a bit of like a 10 to 15% bounce, which is going to be really nice. So I hope you guys enjoyed this video. I hope you guys have been doing well. Yeah, my my last few weeks have been really well. I hope you guys have been doing well also. And this week and the weeks and days to follow, I'll be back and updating you guys often. Ramadan just ended, and I was also on vacation, so I didn't get a chance to update you guys with videos as much as I would have liked. But I'm back, so here we are. So I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff, and I will see you guys tomorrow. Have a good one. Take care.